Well, the Sensex and the Nifty regained half of last week's losses, gaining 1% each, with banks gaining in tandem with the blue chips, but the mid-cap outperformance is something that continues. The mid-cap index soared 4% last week. Hello and welcome to the Editors Roundtable. On this week's edition, we decode IT earnings, which was the talk of the town all week. We put the spotlight on Vodafone Idea's FPO, and we take a look at RBI's regulatory action and tell you why it's been a quiet phase one of voting. I'm Sonia, and with me the editors Prashant, Nigel and Nimesh. Also in the newsroom I have Harish Krishnan, the co-CIO and head of equity at Aditya Birla Sun Life AMC. Harish, thank you so much for joining us on the show today. But folks, it has been a really good week, right? The bulls came back, at least through the course of the week. And there was so much buying through this month from domestic institutions as well. Just goes to show the strength of the retail fraternity.
I mean, locals have been big buyers, right?
Yeah.
Foreigners have been selling, but I'll just take yesterday's example, a 300-point rally from the day's low. We were talking about how FIs were short big time, about 1.5 lakh contracts, and we got that 6,000 crore positive number from DIs, and FI is forced to cover very furiously. The question is, we just had Ramdev Agarwal on the show earlier. He said that elections don't matter for the locals. Hum to yahi hain. Yeah. We're going to invest here, we're going to buy here. It matters for foreigners who own about 17-18% of the market.
Correct.
And the big thing with elections is, I mean, with continuity, that money actually may start to come back. So,
but you know,
that's
just to add to that point, this time the only difference is the FI holding is at a all-time low, right? Yeah. So in that sense, if it's a positive outcome, it's only going to be a positive from a flow perspective, that the foreigners will come in and they'll invest into the Indian market. So from that sense, the risk is not much, you know, from a flow perspective. That's something we need to take
Not outflow. The positive is if there is going to be inflow.
Well, so let's do a quick recap then of what went on in the week, and then we'll get Harish's opinion as well. So for the week itself, domestic cues, they took center stage, and they managed to overpower any kind of global jitters that we saw, whether it was geopolitical issues or hawkish commentary or hawkish data point that did come in from the United States. That's stronger data, which is termed as hawkish in terms of the action that is expected from the Fed. The Nifty and the Nifty Bank, well, they were up close to 100%. You'll say, well, pretty well done, right? But the real action is in the broader markets, and that's not just for this week, but even for the month so far. For this week, the mid and the small cap indices were up 4%, while the Nifty eked out some gains. So that's telling you that the broader markets, well, they're up and running. The only problem for me is, the India VIX cracked 20% for this week. Yeah. So two ways of looking at it. One is we are setting ourselves for a big bullish run. The problem is, are we getting a little too complacent? That could be one factor that you would like to look at, but I would lean more towards a bullish, bullish move coming, say, in the next couple of months or so. RBI action, well, that hurt Kotak Mahindra Bank, so that one was the biggest loser on the Nifty. The biggest gainer, by the way, was Axis Bank. 10% apiece in different directions. So Axis was up 10% for the week, Kotak Mahindra Bank was down. And we're talking about themes that did well. Pharma did very, very well. You had Divi's, you had Biocon, both of them up more than 10%. And from the metals pack, that PSU and metals put it together, it's being a good combination because SAIL, MOIL, both of them were up and running. So I think the Nifty really is in that broad band, 500-600 points odd, but the real action is in the broader markets. How are you reading it, Harish? At one point of time, everyone said 21,700. Are we going to go a little bit lower? Well, we have bounced close to 1,000 points from there.
Right. So yes, as you rightly pointed out, Nifty has been in a slightly more settled range, whereas the action clearly has been at the broader pack. So clearly, markets in the medium term, we don't really take a near-term view. In the medium term are driven by three factors. You've got earnings, which is fundamentals. You've got flows or liquidity, and then you've got sentiment, which could be, other alternate asset classes, their interest rates, etc. If you look at where each of these are slotted, I think earnings, we saw a doubling of earnings in the last 3 years. Our sense is that the next doubling of earnings could be between 6 to 7 years. So we're not going to definitely be doubling on this base over the course of the next 3 years, but it's going to be still over a 6-7 years, which is still one of the highest, relative to the world. And this is underpinned by a strong balance sheet of corporate India, the great investment boom that we are seeing in India, and as well as the structural demographic dividend that we are reaping, right? As far as flows is concerned, our sense is that clearly while SIP flows are strong, continue to remain buoyant, they are more the foundational flows. What matters to the marginal price now is driven by what the HNI thinks and what the FII thinks. And I think HNIs have been extremely exuberant. They continue to have record positioning in the markets, and they're continuing to add on to those positions. and clearly the electoral verdict is a big sentiment boost. FPIs as well are looking for that certainty. So in the near term, possibly that could be a catalyst for incremental flows, which can lead to that rally. Sentiment is where I think we are a bit wary of, because currently we are in a zone where nothing can go wrong. We are at that extreme exuberance. Global interest rates have gone up quite significantly over the course of the last month and a half. I don't think India has ever has felt that shock wave that is happening out there.
You think we will feel that shock? The 2-year is at 5%. Last time we were at 5%, the US market sold off 10%. Right? Recently,
yes.
A few months ago. The US is about 4-5% off the highs. Do you think there is, if it sustains at 5% for longer, it causes some problems?
See, it's obviously hard to call out when that needle will prick. But I think we are watchful for two other developments globally. One is what's happening on the Chinese yuan. It's been on a peg for a long period of time and it's starting to slide off. I mean, Indian currency has been rock solid over the course of the last 2-3 years. It's been one of the most stabler currencies, and in some sense the correlation when we do our numbers, it is now more aligned to the Chinese yuan than the US dollar. So therefore, any ripple that happens on the Chinese yuan can have a meaningful impact on us. The second and the bigger thing is
the yuan is weak. So you're saying the rupee, it could.
So it is stable for now.
Yeah.
But if the yuan were to crack,
okay,
then Indian currency may also follow. So that is one thing that we need to watch out for. Do we know when it will happen? The answer is clearly no. But do we need to have that in the back of our minds? Clearly yes. The yen is the other big variable, because there's a lot of carry trade. We've seen a massive slide down there, and that is again something that we need to watch out for. So I think while the US is what hogs most of the headlines, I think it's these two markets that we look for from an Indian market perspective.
Sure.
And currently, of course, it doesn't seem to be impacting, but we'll have to wait and watch out.
Okay, the big talking point this week was the tech earnings, right? So I just want to talk a little bit about that, then I'll toss to you, Harish, for your view. Major players, Infosys, L&T Tech Services, reported their numbers this week. Now, of course, have reported subdued guidance as well for FY25. But let me talk about the big stock in focus, which was Tech Mahindra, right? It gained about 8%. Now, the company spoke about how FY25 will be a turnaround year for them, and the big focus is going to be on cost optimization. In fact, we also during the day spoke to Nitin Rakesh of Emphasis, who said that shorter duration deals have now picked up, and shorter duration deals are early signs of discretionary spending. So that's another big takeaway. The other thing that we learned is that the communication sector is still struggling a bit. So both Cyient and LTTS spoke about that. Cyient said that the conditions in the market call for some prudence. The communication sector has not recovered. There's a delay in client spends. And LTTS also spoke about concerns both in the industrial products and the communications industry. They said industrials is impacted due to higher interest rates, and communications is weak because private 5G is just not picking up. So the summary of it all was that there is no real improvement in the macro environment. The FY25 guidance is subdued, Infosys, LTTS and Cyient, but the companies are now focusing on investing for growth, and the margin guidance is getting pushed out. What is your biggest takeaway bid? And for somebody who's invested in this sector, in IT, what should they do now?
So we think that IT is still in a constructive zone from a 2-3 year perspective. Okay. See, ultimately stock prices are slaves of earnings. When we look at earnings, it is relative earnings to the rest of the pack. So if you look at profit pool share of the IT sector as a percentage of the total top 1,000 companies, that number pre-COVID was close to about 12%. During COVID, during that boom, it went to 15% of total profit pool. And today it is at 9%. So the question really that one has to think of when one is taking a 2, 3, 4 year kind of a view is whether this 9% is likely to go to 10, 11, 12%, or it's going to stagnate at 9, or it's going to crumble down to say 6, 7% of the total profits. Our sense is that most management teams are reasonably cost conscious in the sense that margins have come off quite significantly from a pre-COVID level. Once they are clear of the demand environment and they are all waiting for that recession to come through or the slowdown to come through, I think there's going to be a massive tightening of the belt, and margins are likely to go back somewhere close to pre-COVID levels. Over the course of the next 3 years, we do think that spending will come back, and therefore a combination of both of these makes us believe that the end profit pool share is likely to be higher than the 9%. And therefore, we think that these are opportunities for us to to participate in and to accumulate rather than to get worried about whether, hey, FY25 guidance is poor. Because we were never really anticipating anything great. Of course, it's been softer than even our subdued expectations, that no doubt about that. But I think the gameplay that we are playing for is maybe slightly more longer term at this point of time as far as the IT sector is concerned.
Okay. Well, the Vodafone FPO, you know, that was the other big talking point, right? The shares opened at a 7% premium on the bourses. The cash-strapped telecom company raised 18,000 crore rupees via the recently concluded FPO. Aditya Birla Group Chairman Kumar Mangalam Birla actually called this the beginning of Vodafone Idea 2.0. But Nigel, what does the FPO mean for the firm?
Well, you know, Mr. Birla's body language itself is telling you that he's back and he's here to battle. You know, but let's go across to the wall and run you through these details. Well, Vodafone Idea, they've survived for now. Will it revive? And then will it thrive? You know, that's the important point. So for the time being, survival is something that the street is working with. They came out with this FPO, 18,000 crores odd. They got demand of more than 1 lakh crore. And the overall issue was subscribed close to around 7 times. Why was this important and why was the FPO such a big success? Well, I'll put down 4 big reasons. The street is working with a 15 to 20% tariff increase after a few years post-elections. The second factor is the promoter entity, they pumped in money at a premium, you know, more than 14 rupees, and then the FPO was priced around 10, 11 rupees odd. So the pricing they got right. The third factor is the street is a little bit optimistic that Jio will come at some point of time to list in the market. So that could be another driver that got so much of interest into this particular FPO. And finally, you know, IIFL, they're saying that maybe there could be some kind of reduction in the AGR liability. So that's an outside chance. But those are the broad reasons why, in fact, maybe that this FPO did do well. What does this do for Vodafone Idea? It paves the way for some bank funding, 25,000 crores odd. It gives them growth capital to, you know, pump themselves up with regard to 4G as well as 5G and make them more competitive. And finally, they've been losing a lot of subscriber base. So it helps them arrest that decline and maybe try to pull back some part of that subscriber base. Now let's break this up for you. What is the money that they have at their disposal? Close to 45,000 crores. Break that up. FPO, 18,000 crores. Promoter infused 2,000 crores. And you have bank funding. So they have so much of money with them to live to fight another day, so to call it. And for the next couple of years, they seem well placed. The debt in their books is more than 2 lakh crore odd. But at least they have this money for the time being. What are brokerages making of it? Well, Nuvama, they upgraded the stock, target price around 14 rupees. They're saying that the company now is, is some distance away from a going concern to investable idea. So for the time being, it's the going concern. But to become an investable idea, we'll require to see more traction on ground. And CLSA on Indus Stars, you know, that was a play. If Vodafone Idea survives, then Indus Stars will be a play. The stock has seen a big rally. They have upgraded it, but they're saying even at the target price of around 450 rupees, it trades at a sharp discount in comparison to its global peers. So the telecom space is going to be the sector to watch post the elections. All these stocks will be in focus. For the time being, Vodafone Idea has survived. Will they revive and then thrive? Time will tell. Well, Harish, I want to come across to you and ask you, what's your view on this particular one? How do you see the telecom space, panning out? FPO was a success, but what happens from here on?
So we do think that there will be further tariff hikes, possibly 1 or 2 in the near line of sight, and that obviously helps the overall sector cash flow dynamics as well. We do think that we are more likely to be in a 3.5 player market than what most people kind of envisaged before this massive amount of fundraise, and therefore. We are enthused by the overall sector in terms of its ability to throw out cash flows and to redeploy that at reasonably healthy clips of incremental ROIC, because this is a sector where return on capital employed has been extremely poor over the course of the last 15 years for all the major players, right? Most of them were loss making for massive amount of time. I think this could be a time frame where we're going to see the reverse, wherein a lot of them would end up throwing record dividends, record buybacks. So I think there's going to be a change in the fortunes of the overall sector, which has done very well over the course of the last 3-4 players, and now it's going to see some kind of a new equilibrium, so to speak, between each of these players.
Okay, all right. So that's
we just had Ramdev Agarwal with us on the program on Vodafone. I asked him about Vodafone Idea. He said he should not be. No, the second. So I persisted and I asked him again. He said it should no longer be seen as a MNC private company. He said it's very clearly, of course, they already own 30-33% before this FPO. but it's a company which now very clearly has government support.
Yeah, absolutely.
So survival is, he said, assured, which is what you're saying as well. But thriving, how well they do, I think that is something we need to watch out for.
All right, let's do one thing. Let's take a short commercial break. On that note, we'll continue to decode all the action in the market and take a closer look at the voter trends this election season as well. Stay tuned.